Hello, we're live. I'm Mitch Goldberg. You're watching my live stream. It's called Be the Boss of Your Money. It's about personal finance, investing. I share with you 30 plus years of my experience. I share with you lessons from 30 years of seeing people make mistakes in their financial planning, their investing, and you'll benefit from the wisdom I've picked up over the years from making my own mistakes and solving my own challenges. That's what the show is all about. I really want to hit home personal finance, investing, all the things that go together with your money. That it's a tall order, and I do this every day. I love doing it. That's why. I mean, I mean, think about this. I come out here every day and talk to you about this stuff. It, it is a big effort to do this for as long as I've been doing it, and it means a lot to me. It's personally very gratifying. I love teaching. I think maybe in another life I'd become a teacher. But I love this. I love the live streaming, but it's gratifying because I feel I'm helping people. People tell me that all the time. And I appreciate your time. Your time is so valuable. It's incredibly valuable. It's precious. And I greatly appreciate that you spend some of it with me. So, having said that, we've got riots, we've got rates, we have riots, rates, and asking what the heck happened yesterday and why did the stock market just step over all this news like nothing? It just, if you only looked at the stock market, forget the news for a second, you wouldn't even know that anything happened yesterday. And here we are today. Federal prosecutors are thinking about indicting President Trump for the riot on sedition. It's really just incredible. We're living in unprecedented times. 6 days into 2021, and we've got the craziest thing of all. I mean, weren't we supposed to end 2020? That was the playbook, right? We end 2020, turn the calendar, we get back to normal. We get back to normal in 2021. Not happening right now. It's still early in the year, and I'm optimistic things will be okay. Are any of you tired, by the way? Like, I stayed up past 3:30 in the morning to watch the full process play out, the votes, the Senate, the House. I watched all of it. Um, not only did I find it fascinating, but I found it like such a boring tempo that it was like mesmerizing. It was just nice to have a little boring in my life, and I couldn't go to sleep. I was all charged up. I'm sure a lot of you people were, a lot of you folks out there were, all folks. I called you folks. A lot of you guys out there were really tired as well, and from watching all this. But it's like a day of everybody's kind of exhausted, kind of shell shocked. Like, are you guys afraid to go on social media today because you just want to avoid like the fights and the shouting and the back and forth and the same thing over and over? Oh boy, it has been crazy. Anyway, welcome to Be the Boss of Your Money. It's my live stream. I do this every day. It's my own show. I love doing it. Your questions is the most important part of the show. So if you're watching this in the live stream or replay, hit me up with your questions. I'd love to answer them. Words of wisdom are always appreciated. Words of encouragement are always appreciated. And I've got some words of encouragement for you. So we're going to make this a quick one. Usually Thursday evenings are like it's my last stream of the week. It's more like catching up on things, and we just kind of fly through it. So let's roll the intro, and we'll just breeze right through this. I'm going to make this painless, okay? But you're going to come away better for it. I'm going to give you some perspective. All right, we're back. Still testing the new mic, by the way. I have a new microphone. It's the Shure MV7, and it's just just a matter of getting it the right distance to your mouth. You don't want it right in front of your mouth. You kind of want it, you want to talk across the mic. It helps with the plosives. Plosives are like popcorn, check, check, tom, tom. So, pop. Okay. So that's what that's for. So I think it's in a good place. Let me know how I sound, people. I'm really enthusiastic about this. I made a video about the mic, a review. It's on my YouTube channel. So if you want to check it out, every now and then I pick up new gear. I do a review about it and let you know how it's working, give you a little behind the scenes look of putting on a live stream, live show every single day. So we've got a couple of things to talk about. I'll do the quick share screen. I should stop bumping into the desk. I feel like it's making the camera a little shaky. Let's do the share screen. Word of the day. What's the word of the day, folks? Come on. You know what the word of the day is, right? You know what the word of the day is. First, let's say hello to a few people out there. Okay. We got a few people out there. John is out there. Hey, what's up, Tut? Tim is out there. Hey, Tim, what's doing? I hope your new position at Gerwin is going as well as could possibly be. And John, I hope you heard from my friends and hope they were able to help you out with your company's pension plan. All right. So the word of the day, such an easy question. What could be think of the word that's going around today, right? The word of the day is sedition. What does it really mean? I just have to put this up here. Incitement of discontent or rebellion against the government. Any action, especially in speech or writing, promoting such discontent or rebellion. Do you see that? Any action, especially in speech or writing. You can't say, well, just because I didn't march into the Capitol, I'm not the one who threw the sticks and stones. You're part of it. You're an accomplice. That's what sedition is all about. And there is there's a written record of it. It's called Twitter. That's the big word going around today. So let's click that away. Let's take a look today. Yesterday we had a 400 plus point up day in the Dow. Today we had another big day, up 250 points. I don't know. I guess 250 points really isn't that big of a deal, but we did get a close over 31,000 for the first time. I mean, wasn't it just a big deal that we hit 28,000, 29,000, then 30,000? Break out your Dow 30,000 hat. Thank you very much. Now we're at 31,000. I mean, look at that, 31,000. S&P almost 4,000. I mean, a lot of year-end targets for 2021 are 4,000, 4,100. It looks like we could be there, I don't know, by next Thursday. Okay. So a week from today, NASDAQ, I'm not saying that's a prediction, by the way. I'm just saying if we go up at the same rate every day. Okay. That's not a open prediction. All right. NASDAQ up 2.5%. NASDAQ's record high. Russell 2000, almost 2,100. Look at that move. It was up just about almost 4% yesterday. It's up another just about 2% today. And the VIX, and I talk about the VIX, the fear gauge, I said I really want to see it below 25. It is plunging the VIX down 10%, down almost 3 points, down to 22. The confidence, the equanimity that investors have, the confidence and the expectations is sky high for investors, but investors are very comfortable. Today was a really solid day. You take a look at the industrials, Deere up over $9 a share. United Rentals was up with about $20 a share yesterday. I showed this one yesterday. I'm showing these because these are, heavy duty industrial machinery / smokestack companies. Johnson Controls, Textron, Cummins Engines up over $5. CSX Railroad. These are big moves for industrials. Southwest Airlines. I know you're saying Southwest Airlines is a transportation, but in the industrial stocks, airlines fit into that. I'm not talking about just the Dow Jones Transportation Index. You take a look at the tech stocks. Let's take a look at financials first, okay? I know PayPal's not necessarily a financial stock, but it does trade. It does trade pretty well with the financials. It does trade in sync with them. I'm really liking this mic and the way I could position it. Oh man, how good do I sound? Tell me out there. Listen, I see you people watching, so hit me up in the comments. You like the sound? I'm loving this mic. Loving the mic. So, but PayPal trades in sympathy with a lot, very often with financials. But J.P. Morgan, that stock was up about 4% yesterday. It's up over 3% today. That's huge. IAT is the exchange traded fund that tracks the regional bank stocks. That's been dead money for like 2 years. And finally, look at that. That was in like the low to mid 30s for so long. You see this over here? Can you see that? 24. It was down to like 30 though for a long time. Wells Fargo, I was always wondering who's going to hit 30 first, Wells Fargo stock or Bank of America stock. And here we are. They're both well into the 30s now. Look, the yield curve, that means this is a huge thing. The financials are a big part of the market. Okay. And as you see, the 10-year treasury was over 1% yesterday for the first time since the onset of the pandemic, since last March. And now yesterday it hit 1%. The yield went up a little bit more, a little further into the 1% range. I see the comments out there. I'm going to go check. I'm going to go take a look. I see them right there. So when you have a bigger spread between short-term rates, which are pinned to near zero, at or near zero, and you've got the 10-year treasury at 1%, that's a big difference. It's called a yield spread. And when the yield spread is that big, banks could make a boatload of money. So if you want to see stocks, in my opinion, react to the change in interest rates, you have to look at the banks. The banks are all about interest rates. Interest rates are the cost of money. So you see some of these stocks hit, 100, hit a $30 shot targets like Wells Fargo and Bank of America. Now they're well into the 30s. You could see these stocks with interest rates like this spread. I mean, these things have to be reevaluated for this entire pandemic. Soothsayers are saying, forget the banks, don't own the banks. If you're a client of mine, I've gotten pretty heavily into the banks. Don't buy bank stocks. With the interest rate set up now and the Fed promising to hold rates down and the economy heating up possibly, but even if it doesn't, interest rate, long-term rates are up. This is like nirvana for financials. That's what that is. It used to be, well, if long-term rates started to go up, you knew short-term rates were going to follow and it was going to keep that spread narrow, right? But if short-term rates stay down here and longer-term rates go up here, this is the spread. But you'd expect the short-term rates to rise. They haven't. The Fed said they're not rising. So you don't even have any risk of short-term rates rising because the Fed's not going to go back in what it said. Not no time soon. This is nirvana right now for any company that makes money off of interest rate spreads. And though that favors, banks, investment banks, financials, insurance companies, et cetera. Let's see who's out there. All right. Andrew. Hey, Andrew Hershon. What's up, buddy? Thank you for the thumbs up. I really appreciate that. Appreciate you. Hope to run into you at Uncle Giuseppe sometime soon. That's the last time we saw each other. Good memories, good friend. Good to see you, Andrew. Thank you so much for joining me. We got John out there, John Blake, coming in from LinkedIn. Thank you very much. The sound is great. Oh, sounds great. No, I thought you were saying, oh, Mitch, sounds great. What I was saying, no, you're saying the sound is great. Hey, man, thank you very much. I was like wondering a lot about that, and you've helped alleviate some pressure. Thank you. So the sound is good. I don't even have to do my radio voice. Hi, this is Mitch. Okay. John is out there. He says or asks, Wells Fargo looks like they're one of the only ones that isn't near its 12-month high. Do you feel it has more room to run than the others? All I could really say, and I please forgive me. It's I have to be careful with making express buy recommendations on the show for a number of reasons, basically regulatory. All I could say is that the spreads in interest rates favors banks. And I always feel that the highest quality banks are the ones that usually go down less, recover quicker, but they might not have as much upside. Whereas the banks that are out of favor, disfavored, maybe hated, and Wells Fargo, and I've actually written about this, Wells Fargo, about how they ripped off their customers, but the out of favor banks are often the ones that have the most upside. The issues that Wells Fargo had were already what I think in, was it 2016? It was years ago already. They've got new management, new people in place, and I think the public will eventually um, forget. All the big banks have had their own share of issues. I mean, nothing was quite like Wells Fargo with the account scandal. But so that's like the best answer I could give you. I would like to be more explicit. And you are welcome, by the way, to call me 631-920-6622, 631-920-6622. In fact, I'll put that on the screen right here. You're welcome to give me a shout. Email me and I'll talk to you about that. But so I just think it's a very good environment for financials because of the interest rate spread. Michael is out there. Oh, no. Oh, wrong one. That's the one. Okay, sorry. I switched the wrong one. Let me get back to comments. Michael's out there. Happy New Year. Happy New Year to you too, Michael. Thank you very much. I really look forward to this year. It's going to be our year that we could finally get together, All right. All good. Thank you, John. John, I really appreciate you coming out here. So we've got people coming out here from Facebook, LinkedIn. I know we're on YouTube as well. So let's go on. Let's share the screen. We've got a few more things to look at. Then we're going to end the show. Looked at the banks. These are the FANG M names. Look at this. Yesterday, these stocks got hit, and they didn't make up all the hits they took yesterday. But Apple, good day. Apple was down like $4 yesterday. So Alphabet, that's Google, Microsoft, Facebook, Netflix, Amazon up 23. Amazon was actually up over $40 at one point during the day. So that really sold off pretty good at the end of the day. But you see these red lines at the sides, you see these lines here, there's a green and red line. The red indicates how far they are from their highs. It just goes to show you that these stocks have had quite a sell-off, especially Netflix in the last few months. But that's part of the rotation into the industrial stocks. And people are thinking, well, maybe if the economy picks up, I don't need to own the companies that'll make money no matter what. I can own the companies that make money by benefiting from a strong economy. So what worked today? But technology was the leader of the day. Consumer discretionary, energy, financials, communications. Overall, almost everything worked out. Consumer staples were off a little bit. Utilities were off a little bit, but they've had their big run already. And staples, like companies like Procter and Gamble, they've had such a big run because we were all eating home and buying our cleaning supplies. So I'm not surprised to see a little give back in that particular sector. And last, what we're going to look at, that is it. We're through the screens. All right. So I had a conversation today with Michelle Fox. She is a journalist at CNBC, and we were talking specifically about the stock market and how it could have done so well last year in 2020, and how it just leaped over the actions that happened yesterday. And again, I just have to reiterate, I am exhausted. I stayed up all night, and crazy. Just what a crazy day. But we talked a lot about that. I'm going to post the article. It should be out tomorrow morning. I'll post it on social media, on LinkedIn, Facebook. Keep an eye out for it. Let me know what you think. She'll probably quote me pretty extensively because we spoke for a while. I said that, a lot of people are upset or angry with the stock market, that it's up. David's out there. David, good to see you. David Goldkling out there. Thank you, buddy. Good man, good friend. Hope to see you again soon. It's just people who own assets, they keep making more money, But a lot of people who don't own stocks don't understand it. And they're thinking, I'm working my butt off. I have all this risk of losing my income or making less money or losing unemployment. And they see people make money in the stock market by just sitting back and doing nothing or making money off the backs of labor. It's there's a wealth gap, but that's no secret. The current environment, I think, makes the wealth gap a lot bigger. And I think a lot of people who don't really have a lot of financial literacy are questioning the sanctity of the stock market and what it means. And that's something we need to talk more about. And we need to teach financial literacy more often and more, just a lot more. So some of the things that we'll be talking about on the show. Thank you so much for watching. I wish you a good Friday. Hey, listen, tomorrow, I think we're all going to be saying, thank God it's Friday. I mean, you never know what happens over the weekend, but I think tomorrow, by about 4 or 5 o'clock, we're going to be crawling into the weekend. Thank you so much for joining me. I'll see you Monday.